After studying this module, you shall be able to understand the meaning and concept of responsibility accounting, learn about responsibility accounting and controllability, know the meaning and concept of responsibility performance reporting, identify the need for responsibility reporting for cost centers, and lastly, identify the need of responsibility reporting for profit centers. Responsibility accounting can be defined as an accounting system that collects, summarizes, and reports accounting records relating to the responsibilities of each and every manager. 2. Responsibility accounting is a control system which is based on the principles of delegating and locating responsibility. 3. Responsibility accounting is a system under which managers are given decision-making authority and responsibility for all activities that occur within a specific area of the company. 4. Simultaneously, managers are held responsible for their activities. 5. Managers are assigned segments for which they have the decision-making power for the decision outcome. 6. These segments, which may be departments, branches or divisions, are known as responsibility centers. Uses of management accounting. 1. One of the uses of management accounting is managerial control. 2. Among the control techniques, responsibility accounting has been given importance. 3. Responsibility accounting represents a method of measuring the performance of various divisions of an organization, while other control devices are applicable to the organization as a whole. Now we will discuss the significance of responsibility accounting for management, which is number 1, easy identification of individual managers responsible for satisfactory or unsatisfactory performance. Number 2, motivational benefits. Managers are given absolute power which helps in boosting the motivation of managers. Number 3, data availability is there which helps in proper assessment of the managers. Number 4, relevant information is available which can be used to estimate future costs and revenues which help to fix up standards for various departmental budgets. Number 5, responsibility accounting helps in planning and decision making too. Information provided through responsibility accounting can be used for taking various decisions. Number 6, responsibility accounting helps in achieving the objective of delegation and control simultaneously. It delegates responsibility and at the same time control is also not diluted. Objectives of responsibility accounting. 1. To determine the contribution of a division as a subunit. 2. To provide a basis for evaluating the divisional manager's performance. 3. To motivate the divisional manager to operate his division in a manner consistent with the basic goals of the organization. Now we will learn about the process and basic requirement for implementing responsibility accounting. 1. To implement a responsibility accounting system, the business must be organized so that responsibility is assignable to individual managers. Responsibility of each and every subunit manager should be clearly defined. 2. The organizational chart is used as a basis for responsibility reporting. Organizational chart spells out the relationship structure of various positions in the organization. 3. If clear lines of responsibility cannot be determined, it is very doubtful that responsibility accounting can be implemented effectively. As for responsibility accounting, this is the basic condition. If it is not satisfied, responsibility accounting cannot be implemented. 4. Decision-making power may be delegated for many areas, but several important decisions may remain exclusively under the control of top-level management. These cannot be delegated as they are the most vital decisions. 5. Several items will be directly traceable to a particular manager's area of responsibility, but not actually be controllable by that manager. In such a condition, that manager should not be held accountable. Now, we would understand the concept of control. There are two types of controls, namely absolute control and relative control. Absolute control or absolute controllability is rare. As a subunit manager, have top-level managers who have a say in every matter. As absolute control in most of the cases is not possible, the manager is therefore usually held responsible for items over which that manager has relative control. Relative control. Relative control means that the manager has control over most of the factors that influence a given budgeted item. Although there may be some areas over which he or she would not have control, but yet he or she can be held responsible. Responsibility reports. Data is appropriately summarized, filtered, and/or condensed as information flows upward to higher levels of management. It encourages or allows management by exception. Two basic methods are applied to present revenue and expense data. 1. Only those items over which a manager has direct control are included in the responsibility report for that management level. Any revenue or expenses that the manager cannot directly control are not included. 2. All revenue and expense items that can be traced directly or allocated indirectly to a particular manager are included, whether or not they are controllable. Desired features for responsibility reports are: number 1, timely preparation; 2, issued regularly to all departments and units; 3, format should be relatively simple and easy to comprehend; 4, confusing terminologies and jargons should be avoided; 5, results should be expressed in physical terms wherever appropriate. Such figures may be more familiar and understandable to the managers. 6. To assist management in quickly spotting budget variances, both budgeted and actual amounts should be reported. 7. And last, report must include both current and year-to-date analysis. Responsibility Accounting Performance Report. The Responsibility Accounting Performance Report is a budget that compares actual and budgeted amounts of controllable costs for a department and its manager. The Responsibility Accounting Performance Report collects all the responsibility accounting budgets made for each department and summarizes them in one large report. Basically, this type of report is a summary report of all the responsibility accounting budgets made for individual managers. Executive and upper level management uses them to track the efficiency and profitability by department and managers. The Responsibility Accounting Performance Report is also used to help explain changes in cost structure and profitability from the budgeted expectations earlier in the year. Let us now recapitulate what we have studied in this module. We have studied about responsibility accounting, which may be defined as an accounting system that collects, summarizes, and reports accounting data relating to the responsibilities of individual managers. It is being used as a control system and motivational tool in an organization. Delegating and locating responsibility are the two basic principles that are followed. Responsibility accounting report contains varying amount of detail included in the reports issued to different levels of management.